Good morning, good evening, and good afternoon, everybody. Hope everybody's had a fantastic couple of days. It has been an absolute ice winter wonderland where I am, and I know it's kind of the same where Mike is right now. Today, we're going to get to a quick market review. We're going to talk about some all-time highs for the S&P 500. Then we're going to go through the Sniper's portfolio, still at that 92% win rate, 13 straight wins. I believe that is one more than it was last week. We're going to talk about a recent trade that we had last week in Morgan Stanley. We're going to talk about a trade that's going to be coming up today from Mike. I'll let Mike spill that secret. And then later on, we're going to talk about some of your stocks, some of your questions that you have. But first, the man of the hour, Mr. Mike Wade. How you doing, sir?
Hey, man. Good morning. Well, when you said Mike had some snow this week, obviously I'm not in Costa Rica.
I don't think it's ever actually snowed in Costa Rica.
I don't think it has at all, ever, or even ice. But I've been coming to Houston since I was in high school, and man, I've never seen 5 inches. We had 5 inches of snow on Tuesday in Houston, Texas. What?
That's crazy. It's crazy. that's wild.
Yeah, man. It was fun though. People I've never seen more people outside on the sidewalks than Tuesday when we had all that snow. People just came out and were playing, building snowmans, and yeah, it was a lot of fun.
Yeah, me and my kids got in a snowball fight, which I obviously won.
Of course, yeah. You threw snowballs at your small kids and won the snowball fight.
What's going on today?
Well, you mentioned the market's at all-time highs. Let's hop right in just right now. Let's do this. And let me show you a chart of the S&P 500. All right. Now, one piece of news, of course, and the whole world knows it, is Trump took office on Monday. It was a holiday, Martin Luther King Day. And then since, the markets have responded, let's call this enthusiastically, yesterday, touching all-time highs at 6,100. And so this is a really important decision point for the markets. Are they going to do what they did last time when it touched 6,100, tried again, and then fell away? Or are we going to break above 6,100 and keep on going? So Trump is believed to be good for the stock market and good for the economy. The U.S. markets have been very volatile lately. It's just been crazy. Crash, recovery, crash, recovery, crash, big recovery, even higher than we were here as the markets were coming down. So it's a really interesting point to be at. And what I've told my community is that 6,100 is really important, and to pause any kind of bullish longer-term directional prognoses and wait for the S&P 500 to close above 6,100. If we get that, that's all-time high close. And for me, green light for a very logical bullish prognosis. So it's really cool that we're here. And I love these when markets are here at all-time highs and testing. Because if we do get one of these things happening, if we do get a pullback, and we'll look at futures here in a minute, then I'll sell credit spreads up here. I'll put lines in the sand, maybe up here around 60, and it depends on the stock and the instrument. But the markets itself, the SPYs, for example, we could sell a credit spread above all-time highs. That would only fail if the markets began to get another all-time high. So anyway, it's really interesting to me because I'm a trading geek. And so far this morning, the futures, the S&P 500 futures, which is what I was just looking at the SPX, which is the actual index itself, but the futures are suggesting a flat open. So 0.12% down. What does that mean? That means that when we do open today in about 10 minutes, we're going to see the S&P 500 below where it was yesterday. So we're not going to be above 6,100. It could happen later today. So if you're trading, keep an eye on this chart. You start seeing the S&P 500 blast above 6,100. Go ahead and find your favorite bulls that are doing the same thing. And that alone, coupled with the hub software, the AI signals, the Elliott wave, all of that, um, those trades will work even better. Those bullish trades from those two systems will work even better if the S&P 500 is setting all-time highs. We're a whisper away. We shall have to wait and see what happens. All right. Now, last week was our first, Ryan, it was our first class in what, 3 weeks? Was last Thursday, I believe.
Yeah, I think so. It's been a
Yeah.
while.
Yeah, we took 2 weeks off for the holidays. And then on Thursday, the 2 Thursdays ago, it was Jimmy Carter's memorial service. So the markets were closed on that Thursday. So last Thursday was the first one in 3 weeks, and it was on Morgan Stanley. I'm going to show you some software here. This is some software I use to track all of these trades that we do. And here's Morgan Stanley. We got in on last Thursday and out the next day. Let me show you this little picture here. So we got in the morning here. This would have been on the 16th, a week past. We opened here, closed higher, and we sold a credit spread that would make money anywhere above 122, which was right down here. So the stock opened here. We put on a trade that would make money anywhere above 122, and the stock kept on going. And here's our profit in this trade. Let me show you this risk graph here. This is where all the profit is, and this is where all of the risk is. A lot more risk than potential profit, but along with that comes gargantuan probability of profit in excess of 90% typically. And it's just a really cool, high probability, short-term way to just grab profits. We go for about 10% per trade in this one in a matter of a day. We closed this one down. We sold it for 12 cents, bought it back for a penny right here, and we netted $55 on this trade in 2 days. And we got 12 cents, so that was a 13.64% trade in 1 day. We got in Thursday morning, out by the close on Friday, 2-day trade, 13% plus in your account. That's this game we play, y'all. And Ryan, how many straight winners do we have now? What did you say?
13, I believe. I don't know. Let's check the performance. How many we got?
Yeah. There it is. Yeah, now this started in 2024, and I'll probably start another one of these, but since we're on a win streak of 13 straight wins, that's amazing. I think last year we got up to 19 or 18 or something, but that's a really good win rate. 92% wins, and our average profit is 11.15%. Now that's with losers considered, and yes, we did lose. We lost 5 out of 59. We won 54 out of 59, and the average trade result, let's say it that way, it's more accurate, is 11.15% every 5 days. All right. So you've heard all these market pundits on the various platforms and channels, and you're not going to normally see anybody advertise our average win rate is 11%. It's not normal. Most talk about doubles and triples. You know, the movie Moneyball. I haven't mentioned this in a while, but Moneyball, the movie with Brad Pitt, Oakland A's played Billy Beane, Oakland A's manager. They didn't have enough money to buy heavy hitters, so they just got people that would get on base on a lot. And so forget about doubles and triples or even singles. Just walk and get on base and get on base and get on base and score runs. So imagine you're able to make 11% every 5 days. You could take some amount of money, trade it for an average of 5 days, and on average make 11%, and then take that same money and do it again 3 times in the same month. And then these small returns add up pretty darn fast. So Ryan, that's our game, and it's a fun game. We call it snipers. I have a community of people that trade these, and I've trained them over the last couple of years. And I've been trading since '98 and teaching since 2001, long time. And I've never seen people do so well with a system. It's a system. And Ryan, I know I jump around. I apologize, but let's put the guidebook up because we do have. It is a system, and it's mostly rote. It takes understanding support resistance. I call them lines in the sand. It takes into account what kinds of news add the best probability to being right. It talks about credit spreads. So that's a little bit more of an advanced strategy than buying calls and puts. It actually involves selling and buying options in the same trade. And we call them credit spreads. And you need to understand how to construct them for bulls and bears as well as manage them. There's 5 steps there. And this guidebook walks through graphically every single step. It's free. You can grab it down below. There's a link. Throw in your email address and your name, and we'll send you the guidebook. And then next week, if you get it today, next week, you can have it read. It's pretty straightforward, I believe. And then be ready to snipe with Ryan and I every Thursday morning at 9:15 Eastern. And right now, it is 9:27, and the markets are going to open in 3 minutes. So we're going to go right to our first trade for this week. And if you have any, as Ryan said earlier, if you have any stocks you're looking at, and there's a lot of them out there right now because we're in earnings season, please pop them in the chat box and we'll take a look at yours here in just a few minutes. So let's start with GE Aerospace. Yeah, they blew out their earnings, man. The stock pre-market is up 9% after fourth quarter results surpassed analyst estimates on the top and bottom lines. And if you take a quick look, you can see their earnings per share were $1.32, but analysts were expecting $1.04. They blew that out by about 30%, and they posted revenue of $9.88 billion. Analysts were expecting $9.51 billion, so they blew it out. And GE Aerospace is really up big this morning. We're going to take a quick look at that. Now, one thing that is not here, that is missing, that is better if it's here, is them raising future guidance. They didn't announce, they confirmed the expected guidance, but they didn't raise it. All right, so that is if that was present, this would be even more of a no-brainer. All right, so what I'm going to do now is pull up a chart in the Hub software for Morgan Stanley. No, what am I saying? GE. That was last week's trade, Mikey. Let me pull up a chart of GE, and let's take a look at the chart. And then the next step, given the news is good, the next step is to figure out where we can put our line in the sand. What's a line in the sand? Well, it's a support or a resistance level. I want to keep it as colloquial as how do you say that word, Ryan? Colloquial,
I think. Yeah, colloquial. I don't know. Now that I'm saying it so many times, it doesn't even is it an actual word? Colloquial doesn't sound right. I don't know.
I know, man. Excuse me. As I get older, I forget things, man. And I just said that word. It didn't sound right. An average Joe way of saying it, colloquial. But GE this is where it was yesterday. And then where is it today? Well, if you look up here, you can see the pre-market pricing is between 200 and 201 or so. So the stock, and we can watch it open here, but there's the stock. It's opened up right up here at 200. Now, 200 is going to be resistance. This is a little bit of an advanced idea, but if I draw a line dead on 200, let me edit the settings here, and let's make this exactly 200. So 200 is support resistance. Right now, the stock is 50 cents higher than 200. All right, now what happens from time to time, and it's actually pretty common, is a stock gap up huge in this case from below 190 to slightly above 200. Let's call it 200. Stock's at 200. What can happen, and happens quite a bit, is this level will hold and the stock could retrace a little bit. And indeed, you can see it. The stock is wrestling. It's above and below 200, 200, 200. So institutional programmatic trading is keeping the stock right around 200. So it's going to do one of two things. It could do three things, but it'll do one of two things, I believe. It'll either keep on going or it'll retrace. Now, if it retraces, we got to be careful because we don't want to get our line in the sand too close to the heat. So here's what I'm going to say, because let me give you another analogy I like. There's no blue sky. There's a resistance level keeping the stock. I want to go higher. I want to go higher. It's trying, and it hasn't yet. And so what could happen is that the institutions will begin to sell off the stock a bit. So we got to watch for that 190. Therefore, look left. Resistance here for a few days, then became support, and that will therefore be a support level. And look, the stock is indeed doing it. Look at that. The stock is starting to, it's at 180, 198.90. And it's coming down a little bit. So I'm glad I riffed for a few minutes before we did anything on this one. But we got to be, bottom line is we got to be careful. We got to be careful. So 190 to me is a little bit too close. So then I look left over here and then I can see 185. 185, I know we have a lot of snipers out there from my community, I know. 185 is as close as I would get, but I would rather be at 180. So these lines in the sand, in a colloquial way, are points at which you make money above the line in this case. So we'll make money anywhere above 180, no matter what the stock does. If it's at above 180, we're going to generate some profit on this trade, meaning stock can rise, we make money. Stock goes sideways, we make money. Stock drops to 190, we make money. Stock drops to 180. And as long as it doesn't go below 180, we make money. Up, sideways, down, profit. Good news, blew out their earnings. All of that points to the likelihood of the stock dropping to 180 is limited. In fact, it's probably going to be above 190. But let's try at 180 and see what's there. So now what I'll do is go right into a live simulated. I'm going to take this trade in a simulated account in Thinkorswim. I'm not recommending Thinkorswim. It's a great broker, of course. And there's many. There's many more than just Thinkorswim. All right. Now, I'm in the option chains. These are the available expiration dates. We can go out to Jan 15, 2027. Anybody want to wait 722 days for their profits? I don't. I want 15 days, 2 weeks. I'll take 8 days if I can get it. Might go three weeks, 21 days or so if I need to. But I don't go more than 3 weeks. I want in and I want out. The longer I'm in, the more chance the stock has to move against me. So let's start here with 15-day options. And what I'm looking at doing is selling the 180 put spread. All right, so let me show you again what I'm doing. All right, so I want to just see if there's any premium down here at 180. And look, GE starting to make a run. So it did dance with 200. It's starting to maybe go up. It could still drop from here, but this is a good sign that the stock is going to remain above 200, which means that I can start thinking about lifting up my line in the sand if I need to. And I do, because the Feb 7 180, 177.50 put spread is only bringing in a penny. And then if I look at the chain here, I can sort of start to see where I might get a minimum of 10% of the spread width. In this case, these spreads, if you look at the different strikes here, they're 2.5 points apart. This one is 2. 180 minus 177.50 is $2.50. And my minimum credit will be 25 cents, 10% of the spread width. So I'm just trying to figure out how close I got to go to get there. If I go to 185, sell the 185, buy the one underneath, the 182.50, only 16 cents. So I got to go closer. 187.50 is 32 cents. So that would work. That's enough. So let me show you where that is on the chart here. So what that means is we're lifting our, this is actually a good one. This is a good level. Look left. Now there is 186 right there, right at the top of that bar. There we go. So now this is really amazing. This is my favorite thing in technical analysis. Is support and resistance, as you can probably hear from my my evangelical tone around this. But this gives us 187.50. Look left, precisely the high there. Support resistance over here. It was dancing on either side, hit it, and then came back down. And then 3 days ago, hit it, went above it, stayed below it. Yesterday, bounced off it. That's therefore, because that was resistance, is a good support level. So I like it. So this is what we're going to go after this one. See, I was talking and I missed it. All right, let's try for it anyway. All right, so on this one, the minimum credit will be 10% of the spread width. Now I can see there's only 17 cents. Had I just placed it, we would have gotten it. I probably in hindsight should have done that. So we're not, now it's at 22 cents. Let's go for it. I'm going to do 2 contracts here. And it's at 18 cents. I'm going to do confirm and send. And then we're going to watch this one for a little bit. 187.50. Currently, the offer price is 17 cents. We're asking 25. It's at 19.50. Let's keep an eye on GE. What's it doing? If it drops a little bit, we'll get filled on this one. And it's at 205. That will be resistance. Let's be patient on this one. And let's see if we can get 25 cents. Now, what you could do right now, let me show you. 179, 190, 187.50 is bringing in 78 cents. That's gargantuan. That's gargantuan. And I said before that 190 would be as close as I would get on this one. Right there. And I'm going to do it. Here's why. I'm watching GE, and it's starting to make a run. It dipped its toe in the water below 200 for a bit, and now it's running up. Let's go get that one instead. That one's bringing in 70 cents. I'll give you the trade here in a minute. Selling the Feb 7 190 puts, buying the 187.50s underneath. It's going for 81 cents. That's huge. Confirm and send. And let's see if that one fills. All right, it's showing 80 cents right there. Let's drop it a little bit to get our fill. I'm going to drop it down to 75 cents. Still a lot. 25 cents would be great. 75 cents is 3 times great, which is awesome. That's the order. Let me give it all to you here. Feb 7 190s. Here's the trade. We're selling the 190 puts. We're buying the 187.50s underneath. And we're asking 75 cents. Let's see what it's going for now. And see, it's dropped a lot already. We're not going to get it now. The prior one is at 21 cents. Let's drop this one now since the premium came out. And I want to tell you why in here in a minute. Let's take this down to 25 cents. And I'm going to give you a new price. Here we go. We got it for 30. It just gave me 37 cents. But this is the minimum order. Okay, so once again, stock symbol is GE. Sell to open, the GE Feb 7 190 put in the same order as a spread, buy to open, the same stock expiration, and then the 187.50 put, get at least 25 cents. I just got 37 cents. But 25 would be minimum. Okay. Now, that is our process. The most important part of the process is risk management. My favorite trading saying is manage the risk and let the profits take care of themselves. So how do we manage risk in these trades? Well, if the stock closes less than the line in the sand, which for us in this case is 190, then we close the trade down and we manage our risk. We lose less than if we let it go all the way to max loss. So we don't take max loss. We won't have max loss if we get in as the stock closes below 190. So that's the loss exit, the most important exit. And then the profit exit is to buy the spread back to close for 10% of the original credit using what's called a good till canceled order GTC. All right. So if you look here, if you get 25 cents credit and you take 10% of that, round it up to 3 cents, you put a GTC order in to buy the spread back for 3 cents, netting 22 cents. That's a good one, Ryan. I'm liking it. Gerardo, I like it.
I dig it.
All right. Digging it. All right. Now there's tons. I kind of said this, but last week earnings season began with the banks. Look at GE rolling, man. This is great. So now as we are 12 minutes into the market, GE wants to go higher. All right. So this 200 level becomes stronger and stronger as the stock goes higher and higher. Don't see the stock below 200. Not likely. Could things happen, but not likely. All right, Ryan. Let's see. As I was saying, lots of earnings this week, and then all the way through the end of February, we are going to be target rich. So, what targets are our subscribers, our community looking at?
I asked the question just a couple seconds ago. Any stocks that y'all want Mike to take a look at? Nobody has answered quite yet. Oh, there's one. FCX. FCX. Yep.
That's a copper miner, Freeport. Let's take a look. Oh, sometimes, Ryan, I feel like a vampire because when I see this happen, I love it. Stocks, there's another trading saying, and I know a lot of them because I've been doing this for a quarter century. Bulls climb the stairs and bears fall out of the window. Bad news is the best for sniping. So what I want to figure out now, technically, I love it. I'm already looking at maybe 40 as a good line in the sand. Maybe the tops of these bars here, which would be a little higher, depending on the available strikes. But 40 would be reasonable. Now what I got to figure out is why? Why did Freeport fall out of bed and drop below 37.50? Look here. See 37.50? There's support. And now it's well beneath. So something happened. There's some news out there. So let me go ahead and go into finance.yahoo.com. And you can get news anywhere. Your broker has news. But this is something everybody can access online on a web browser. And so you can see here they announced earnings. And obviously they weren't very good because the stock tanked. Let's see if we can figure out why. Okay, so I'm trying to see if there's anything in the headlines here. Freeport Morgan rises yet lags behind market. No, that was before that. Okay, here we go. Freeport beat on their profit estimates, helped by higher copper prices, and yet the stock dropped. Okay, so as soon as you get the pure sniper trade, you want the news to be bad, all bad. You don't want to see the word beat in their in the earnings. I want to see misses, and preferably I like to see lowers future guidance. And here I see beats, and yet the stock has dropped. So I'm like, could it recover and come back up? I don't know why. It doesn't make sense. I'd have to dig into the earnings more, but that they beat, I would stay away from this one. We at this, especially during the heat of earnings season, which we're in, we can be very selective and only take the best of the best. So I don't like it for that reason, and it's inconsistent with the rules we use in snipers. But if you like the technical pattern, then I would say 40 is the lowest I would get And why am I saying that? Well, look there and mainly look left. Look left. Support, support, support. Look at this. This is a major support level. And now that means that, technically speaking, at least, the chances of the stock getting back up above 40 are mitigated. And you have a good shot of doing pretty well on that one. As long as the stock stays below 40, you'll make money on this one. So I'm not going to do it. I don't think it's a good move from the sniper perspective, but technically it's a decent trade. So you would sell the 40 calls and buy the first strike above on this one. I like this chart, Ryan, but any others, buddy?
C1 EA.
Electronic Arts. Yeah, this was my second favorite one of this morning. Let's take a look at EA. I like it when they tank. Oh, you know what I'm going to talk about a little bit here? One of the other benefits of a stock that tanks is that there's this thing in the value of an option called implied volatility. It's a fancy way to say expense. It's driven up. The expense of options is driven up on big news. There's lots of things that move IV, implied volatility. But one of the benefits of trading in the first 15 to 30 minutes of the morning, which is what we do every Thursday, is that GE, for example, the IV will be really elevated in the morning after they announce and they open the market, and option traders are like, I want some GE options. And so the price gets elevated because of demand and then drops. So that happens in the first 15 minutes, which is why we trade here on Thursdays. And it also happens when stocks tank like this. So there was obviously some bad news. So let's go see what that is. Electronic Arts. It was earnings. I know it was earnings because I looked earlier, but let's take a look together. Okay. Oh, man. This is really good. They cut their outlook. That's the best news of all the news. Lowered future guidance. Cut future guidance. They're going to make less money than expected going forward. So that gives you a 3-month bearish prognosis. 3 months during which the stock is a lot less likely to rise. All right, so that's good, and suggesting the stock's not going to come back up, at least in the next 2 weeks, which is all we care about. Now, the issue we have with this one, though, is that I need to derive a line in the sand, and I just got to figure out where I might want to draw my line in the sand. Now, my brain sees it, and I want to sort of help you see it too. So you want to look left and start to see where turning points occur at round numbers. So check this one out at 135. Let me draw a line at 135, exactly right there. That's 135. Drop it a little bit, Mikey. There we go. That's close enough. 135 support, resistance, support. 135 would be a really good level. You could also sell right down here. And it's so awesome how these support resistance levels that I call lines in the sand occur at round numbers. So 130, look left, support, resistance, support. And then you could even go down as low as 125. So 125 is the absolute lowest I would go on this one. Now, given it has such compelling news, I'm going to see if I could get one up here at 130. So let's start at 130 and then see what's available there. All right, so I'm going to go into the simulated environment of Thinkorswim, and here it's got weekly options, which is good. I'm going to look for the Feb 7s because they're 15-day options, which is right around 2 weeks. And then I'm going to see what is available. Hey, Ryan, am I still here?
Yes, you are.
Okay, good. Somebody called me. Stop.
Oh,
That's my
man.
business partner, and he usually calls me when something happens. So I guess I'm good. All right, I'm going to remind him not to call me during snipers. All right, so let's just take a look here, and now I've got to remember what my line in the sand was. 130, I believe, right? 135. So I'm going to look at 135. I'm going to look at 130, and I might do 125s. That's why I drew all those three lines. All right, let's take a look at 135. And wow, that's crazy. I don't know if that price is valid, but we can try for it at 135, 136. Let me do 5 contracts, and I'm going to ask for 10 cents, see if we get it. I think it's going to dry up, but we're going to try for it. So if you want to follow along here, look at selling the Electronic Arts Feb 7 135 call, and then buy the 136 above. See if you can get 10 cents for it minimum. I'm not trusting the pricing because here it's only 5 cents. So let's just try and see if we get it. All right, so I've asked for 10 cents and the mark price is 27 cents. So that pricing is reflected. It's sort of a phantom. Well, I got it. I got it for 12 cents. Oh, wow. Who gave us that trade, Ryan? Probably one of my snipers.
That was David.
Uh-huh. Thank you, David. That's a good looking trade, baby. All right, so Feb 7 135s on Electronic Arts. I'm going to leave you with this one and then invite you to come next week because this is what we do. This is what we do here. 135, 136 on the calls. And we got calls instead of puts. So we're using calls here instead of puts because we're bearish. And then you want to get at least 10 cents. We just got 12. So try for 10. And there you go. So that's the order that just got filled for 12 cents in a simulated environment. And again, loss management is the most critical thing. If the stock closes above 135, shut the trade down and manage the risk. Otherwise, put an order in to buy this spread back for 1 cent. Having sold it for 10 gives you a 9-cent profit on the trade. Let me leave you one more time with what just got filled at 135 right here. This trade right here will make money as long as the stock doesn't climb back up above 135. Already, if you look at it, it's at the low end of its range. It tried to get above 120 and failed. It doesn't look like it wants to come back. And because of that, consider lower lines in the sand as low as 125, no lower. You might pick 130. See if you can get 135, though. The higher you go, the more probability of profit. Ryan, that's a wrap for today, I think. What time is it? Yeah, it's time for us to wrap. We've almost
Uh-oh. Looks like we lost Mike there. Unless he wants to come back in just a second. If not, then he's still there. Uh-oh. Hang on one second. All right, so that's going to be a wrap, folks. Thank y'all so much for coming, and we'll see you next week at 9:15. Don't forget to check out Mike's guide. The link will be in the description of this video. Y'all have a wonderful day. Thank y'all for coming. Goodbye.